Today I'm going to let you in on a little secret. I'm going to let you in on the secret of knowing when price will shoot up and why, when the price will turn around and go down and why, and you will understand the entire logic behind these moves. You will understand the logic of the market. You will know exactly why these things happen, and of course, how you can potentially profit from understanding this and from knowing when to go in and when to go out. Now, my name is Marvin. I've been in the trading space for quite a long time. I used to work at Europe's largest prop trading firm, and I saw people making hundreds of thousands of dollars in profits per month, not per year, per month. They were making other people's yearly salary sometimes in a day, and that fascinated me. So I became a trader myself. After seeing what worked, after understanding why the market does what it does, trading became effortless. And now I'm very proud to call myself a trader. And in this video, I want to show you one of the principles, the key principles that helped me become a profitable trader myself. So what you need to understand is that the market, no matter what kind of instrument you're trading, Forex, futures, which is what I'm trading, stocks, options, it doesn't matter. Everything is supply and demand, okay? Supply and demand. What is supply and demand? And why will this become so essentially important in predicting these moves? Well, think of a Rolex, okay? Here, I have one on my arm, okay? The price of these watches, they go up every single year. Every single year, Rolex increases their prices. Why? Well, there is more demand than there is supply. There's more people wanting to buy that watch than they're able to get them. For example, fun fact, in order to get this watch, okay, in order to get this watch right here, it was crazy. I bought it in Spain. We went to a Rolex shop, obviously, and I was like, hey, I want to get this exact model because ever since I was 16, this was the exact model that I wanted to get. Back in the day, I thought once I get to 10K per month, I'm going to be free. I'm going to be rich. And then I'm going to buy myself a Rolex. Well, let me tell you something. At 10K per month, life just starts. And I was too cheap to get myself and to reward myself. Back in the day, I think I had my first 10K month when 5 years ago, roughly. And I never got myself that Rolex, so I never rewarded myself. And then January this year, I finally pulled the trigger and I was like, I'm just going to buy it. And it was a spontaneous move. We were in Spain where my fiance is from, and we were just on vacation, and I saw the shop and I was like, I'm just going to go there. So I went inside and I was like, hey, I want to buy this watch. And they said no. They said no. What did they do? They limited supply. They said, I cannot get it. I can put you on the waiting list. And then I asked that woman, Helena was her name, very, very nice lady. I said, hey, how can I get it? Can I just buy some jewelry, some rings, maybe a necklace for my fiance, and then you can get me this watch? And she was like, sure. Just buy some stuff. And I spent like, I think 1.5 or 2K on a ring and a necklace for my back then girlfriend, now fiance. And suddenly I was able to buy that watch. Had to wait 3 or 4 months, and then it arrived and I got this piece. And that just goes to show that if supply is limited but demand is there and demand increases every single year, well, then price goes up. And the stock market it's not really different. If there's more demand than supply, more buyers than sellers, price goes up, right? If there's more sellers than buyers, price goes down. Very easy. And once you understand how you can read this, how you can read, is there more buying or more selling right now, then you can potentially predict these moves and make some money off of them. So in order to do that, we will go into a software tool. We will go out of these charts and I will show you exactly what's happening inside these charts. Okay, we can do this at first using the footprint charts, but I will show you something way better. Okay, so inside these footprint charts, you can see what is going on at any given price level. So here you can see what's going on the bid and on the ask. You can see this. You can see all of these contracts that were traded on these levels. But for me at least, I cannot read the footprint that easily. I know people who trade off of the footprint, but for me it was never that easy to read. So I need to find something different. And I found a software tool called Bookmap. Now, Bookmap, and this will look very confusing at first, I know, don't worry, I'll explain this to you. But once you're able to read this chart, well, trading can become very simple. It's not easy, but it can become simple and straightforward. So, at first, what I want you to take a look at is this on the right-hand side. What do you see? We're going to break this down. You can see the ask and you can see the bid. So basically, if you want to put this extremely simple, on this side, this is the ask. How many people want to sell at any given price level? So 64.64, 64.25, 65. For example, here on this 64.65 level, we have 33 contracts, now 31 contracts, 36. This is dynamic, obviously. So 36 contracts that are offered here at that price level, meaning 36 contracts need to be bought up in order for the price to go up one tick. So once we have gone and bought up all of these 36 contracts, price technically should go up one tick because there's no more people offering to sell their contract at that price. The only people that are left are 35 people or contracts, but they want to sell their contracts at a higher price. So if all of these contracts are bought up, price goes up. Same goes the other direction. If a bunch of people sell their contracts for 64.65, which just happened, and 0.5, I'm sorry, the price goes down. If a bunch of people now sell at this price level, price goes down. Supply and demand. More sellers than buyers, price goes down. More buyers than sellers, price goes up. And in today's video, I will show you an abnormality to this, something that is not supposed to happen, which just happened here, and it might happen again right now. And once you understand this, and like I said, I will give you the entire logic to it, then you can predict certain moves in the market. So here on the right-hand side, you can see Bookmap, and this is just basically another way of showing these charts that you normally know as candlesticks. So as a candlestick or chart trader, you can view your charts in a 5-minute candle, 10-minute candle, 1-hour candle, or just 1-minute candles. It doesn't really matter. Same thing here. Here, 7:30, 8 o'clock, 8:30. So this is pre-market right now. And this is just another way of showing what is happening inside these candles. These green bubbles here are aggressive buying. These red bubbles here are aggressive selling. And something very interesting is going on at this price level. We see aggressive selling here, right? Aggressive selling at this price level. And I can zoom in a little bit for you. Aggressive selling. Here and here. Compare these two bubbles, especially in the combination. Compare this to all of the other bubbles. Price went down with these small bubbles. So every time there was more aggressive selling than buying, price went down. But something happened here where we had so much selling, so many people wanted to sell at this point and at that price. Yet price didn't go lower. Instead, price went up. And that is something that I want you to know about, because that is called an absorption. An absorption is basically, and I'm going to explain this very simple for you guys. If there's more sellers than buyers, price should technically go down. But if that doesn't happen, someone is passively buying up all of the contracts that are offered here. So someone hidden, could be a big player, meaning a bank, a hedge fund, it doesn't really matter who it is. Someone or multiple people are buying up everything that is being offered, sold at this specific price point. Meaning, every time something is offered, they say, thank you, thank you, thank you, thank you. They're going to buy everything. And at some point, there's no more people that want to sell at that specific point. They say, no, I want to sell at a higher price level. And these sellers down here who previously sold all of their contracts at this specific price point, they are now exhausted. They're like, we don't have any more contracts to offer. I'm sorry. And what happens? Suddenly a shift from lots of selling to potentially little selling is happening. And then buying comes back in. What happens then? Price goes up. So every time you see this happening, an absorption abnormally to the market, you know something is going on. You know that this price level could become important. It's very, very interesting. And what happened here, for example, and I'm going to explain this to you in a very beautiful way. You can see that we traded in a range right here, right? So we had some highs here and we had some lows here. But for some reason, the market couldn't break these highs here anymore. We didn't have enough power to break these highs. Same here. We didn't have enough power to go above these highs here. So what happened? Well, usually if we don't have enough power to break above or below a certain level, we need more fuel. We need more fire. Okay? And this is basically the definition of exactly that. The market went out to look for more fuel to the fire so we can break above this level right here. The problem is we couldn't get this down here or down here. There just wasn't enough fuel. So every time we went to this level, we could only go to this level. We went back down again and we couldn't even go back anymore. The market just didn't have enough fuel. So we went lower. And right here, someone said, hey, at this price level, I am willing to give you that fuel to go above this level, above this recent high. So they bought up every single contract that they were being offered at this specific price. And look what happened. Price went above this high into this area. Beautiful. And what I want you to know is these absorption levels, they hold quite a few times. Usually you can see this happening once and it just happened again. You can see the market went down to this level with very bad auction quality. That's a whole nother video, auction quality. But you can see a recent level of an absorption, now bad auction quality going into this level, and this will be another picture beautiful entry here at the potentially 64s. Once you see buying coming back in, you go in at the 64s, you get out, for example, here, or potentially at the middle of the range, or even somewhere here. If possible, you go out in the middle of this range, which will be somewhere here, and then you have a picture beautiful trade. 12 ticks in the ES. 1 contract, 10 contracts, it doesn't matter with how many you trade. Beautiful, beautiful trade. Okay? Quick scalps in the market. By understanding, hey, someone was willing to buy a whole lot of contracts here. They might be willing to buy again in case this happens. Okay? Beautiful. This is, by the way, another very beautiful thing that just happened. And I can already predict what's happening. But that's a topic for another video. Beautiful. I don't want to give you guys too many concepts here in one video because this will give you an overload. For now, what I want you to understand is this is an abnormality to the market. The price should go down, logically, by understanding supply and demand, but it didn't. You know that the market couldn't break above this high. We got now some fuel to the fire, and now the market can go above this high. So you could potentially even trade this breakout here for a quick scalp, because you know the market just got more fuel to the fire. So it has enough power to break above this and this high. Another trading opportunity. So 1, 2, 3 trading opportunities in about, 52 to 21 in about 30 minutes. 3 amazing trading opportunities. This is a 4th one, but that's a topic for another video. Guys, once you understand supply and demand, how price forms, why price goes up or down, and by understanding this simple logic here, you can predict moves in the market extremely easy. No need to overcomplicate things. You can see where things become interesting. Now, if you combine that knowledge with the volume profile, for example, today right here, we have a balanced volume profile. A balanced volume profile, meaning neither the highs nor the lows are very interesting right now. The market just wants to trade at this level right here. These levels, and you can see this in the volume profile, low volume areas. Low volume area means low price acceptance. The market doesn't accept these prices, but it accepts these prices here in the middle. So the market wants to go into this area right here because that is where the market can transact a lot. And the market has one goal: to transact as many contracts as possible. And if it cannot do that here or here, but here, the market will always go to these levels. And if you see this, the market goes to a level of interest. And then you see an abnormally, like an absorption happening at that price level. Voila, you have a very nice trade right in front of you. Right in front of you. This video, guys, save it, like it, subscribe, comment if you have any questions, because just combining the volume profile, abnormalities in the market, and understanding why price goes up or down, that is all you need in order to make trading so simple that it can finally work for you. I hope you like this video, guys. I'll see you in the next one. Bye-bye.